we have a very special guest with us, Prashant Khemka, founder of WhiteOak Capital Management, Johnson, right now to talk about his thoughts on the year that has gone by and the year that will be. Prashant, great having you, as always. Thank you so much for taking the time out, and I hope all is well.
My pleasure, Neeraj. Always a pleasure to speak with you.
Thank you so much. And Prashant, I wonder if 2025, which has been from an India investor's perspective, a year to forget when you look at the relative terms of what the emerging markets have done, teaches us some vital lessons about investing in life.
Neeraj, obviously, India had outperformed quite massively in the prior several years. So it's not reasonable to expect any market to outperform every year, year after year, every other market or any other index like a global index or something. So India has done quite respectably, as the numbers are showing here on your screen, at about double digit, 11% Nifty return. It's in line with the longer term return. So it's been an average year, and we should look at it that way, that we've delivered double digit return. So it's pretty good. I'm quite happy with 25. Obviously, it's equity market, so it's going to be volatile. Yeah, and we still are outperforming over longer time period the emerging markets. The emerging markets, many of those bounced up from fairly beaten up levels, including most particularly China, which is the largest of the bucket.
Right. Prashant, good morning. Hiral on this side. You've been happy with 2025. Let me take the next question. Would you be happy with 2026 in terms of what you're expecting, or is it going to be the other way around?
So I think 26, if it's a similar year as 25, that would be a normal year at the headline index level, which is Nifty or Sensex. However, BSE 500 this year has done a tad worse, not a whole lot. It's still up high single digit, but particularly, obviously, small caps were down, I think, mid single digits or something. And that's why it feels more painful than a 10% year should feel, because the breadth has been quite negative. The number of names that are down are quite large, as the screen is showing. So hopefully next year we would see a normal year across board. So it wasn't a normal year, average year for small caps. It was one of the worst, not the very worst or anything. Small caps have been down 50% as well. But yeah, after 4 or 5 years since COVID, or since 2020, so 2021, 2023, 2024, after 5 years, we've had a negative year, I believe, in small caps. Next year can be prior 5 years were abnormally strong, and this year is weak, 25. So 26 would be ideal if we can have normal year for large caps, mid caps, small cap, all up about double digits, and the market up about double digits. That would be a good outcome for 26.
Mm-hmm. Okay. Now, Prashant, one is what the headline markets do, and even if the headline markets stay okay, there is fair degree of, in plain simple words, sector rotation. But I don't want to talk about that as much as I want to talk about mega trends that are getting built out, which you personally believe are things to reckon with. I would love to know, where is it that you believe there is a multi-year mega trend kind of development happening? And sure, intermittently in quarters there could be disruptions, but broadly you believe that there is wealth creation over a number of years in themes. Where is it that you see those possibilities?
Certainly. So see, equity markets obviously discount these themes way ahead. So let's talk about where the real world we see something playing out very strongly. And let's keep aside for a minute whether it's been discounted by the market or not already. Yeah. So one that we've been talking about for quite some while is obviously the whole, you can term it as the manufacturing boom, or helped by obviously the government's policy, plus the China plus one phenomenon and whatnot. That's likely to continue for a long time to come. We are at very early stages in that whole phenomenon. The other is the new age economy, as is called. Um, that is in India still much early stage than globally. Obviously, globally also things are in early stage with AI and a lot of other things, but AI maybe a few years down the line for India in terms of gaining momentum. It's already started. I'm not saying that it's not there and not visible, but we are still like some of the IPOs that are going on right now in companies that are more what is globally more basic e-commerce and online services, we are still hitting the markets right now in the stock market, and even in the real world, they're still relatively early stages compared to similar companies in China, US, and rest of the emerging markets or world. So that phenomenon still has a long way to go in India. So I would say these two, the whole manufacturing upsurge that's been going on now for close to a decade, uh, has long way decades to go, and the whole new age economy, which truly started, let's say, in and what I'm to give you context, what I mean is in US it started late 90s with the likes of Yahoo, Amazon, eBay, and all these guys. And then in emerging markets like China and Korea and elsewhere started, let's say, around 2010. And there's no specific year where it started. I'm just saying where it started gaining critical mass. That in India, I'm not saying is at the stage where US was late 90s or where China and others were 2010, but yeah, we are still in earlier stages, maybe where it was in China in 2015-18 timeframe, 5 to 10 years ago, let's say, is where I feel we are in gaining that critical mass or gaining that momentum, which is great. It would, I think, the next decade or two. And these all things are still booming in US and emerging markets. And AI is, in a way, a child or grandchild of internet, the way I see it. Without internet, AI would not have been possible. So there would be when a massive there's a something like internet comes, a technology like internet comes. It's like, you know, how electricity came 100 years plus or whatever it was, 150 years plus or something. Then there are many big
Offshoot.
ripples in
Yeah,
terms
yeah.
of technology offshoots. Yeah, so AI is one of the offshoots of internet, and maybe you will see more. So this thing has a long way to play out, and in India we are 5 to 10 years behind some of these other economies. So in a way you can look at it positively. There's a long runway
Right.
that has been demonstrated globally.
Yeah, yeah, most certainly. And viewers, there's a podcast that Prashant has done with us wherein he kind of plays down a little bit, if I can use that term, Prashant, this whole fear around. Okay, there's some music playing around in our studio as well, but he plays down this fear of AI and its impact on or why India is a quote unquote losing out on that AI trade. I don't think Prashant quite believes that, right, Prashant? You think that India will adapt to AI, India will make the world understand AI, and therefore AI becomes a commodity and India benefits from it. You don't reckon that India is a very big loser of the AI trade that some countries have gotten on top of very early, right?
Well, I don't think so. See, in any technology, if you look mobility, yeah, it always does first establish in developed countries like US or Europe. Same thing was true of internet. And then other technologies also similarly. So I don't think there's anything to be worried about. All through wireless, all through internet, and all these technologies coming to fore, India has continued to grow 6-7%. Yeah, call it 6% over the last 30 years. So I don't see India losing out in that sense. Maybe a matter of few years here or there. There's nothing like losing out. It's just um, the time you hit critical mass, maybe a few years later.
So Prashant, that's with regards to where, you're talking about those structural shifts happening, the new age companies, and I think you've said this earlier as well, that they're still in low single digit proportion in terms of the index over years as compared to a double digit that you've already seen in terms of other economies. So I think a lot's that needs to happen when it comes to achieving growth for these new age companies. But let's move to the capex theme from here on. If you're talking about India's infrastructure push, how are you assessing the quality of the new companies which are emerging in the industrials and manufacturing sector as well? And how, do you reckon they become a part of one's portfolio if you have to talk about 2026?
Yes, I assume it is already part of all portfolios, and so it is for us. And the quality, like in any other sector, you have some of the finest quality companies here, particularly capital goods companies. Many of them are very export competitive as well, globally exporting to, emerging markets, as well as US, Europe, everywhere. So some finest quality manufacturing or capital goods companies we've always had, and it's amazing to see a lot of these. That's, as I've said, best part of a market like what we are in India right now. Over the last 5 years, a lot of these companies are getting funded. A lot of entrepreneurs are setting up facilities and capacities, and manufacturing some top-notch quality products that are being exported globally. So to your question, yes, these are already part of our portfolios, and I believe most of the peer group portfolios, and some of these are finest quality companies compared to anywhere else in the world, Hiral.
Okay. Prashant, to add to this, what is missing in terms of Indian markets, I don't know if I should say missing or not, but the FI is coming back. If you have to look at 2025, pressure has been there. I think almost, 1.4 lakh crores is what they've sold already in 2025. What is it that will get them back to the Indian markets? And where do you see them putting their money? Because usually it's been IT and banking as a trend. As soon as they come back, that's where the money comes in. How are you seeing that aspect?
So, Hiral, as I've mentioned in the past and in some of these forums, that a lot of it has to do what you see the money coming in or out of the Indian market. A lot of it is related to actually emerging markets, inflows or outflows. Out of the $800 billion or so that is invested in India by global institutions or FPIs, India dedicated money is only about 20 to 25%. 75 to 80% of this assets are part of global funds. Like emerging markets is the biggest bucket. I would say emerging markets might be more than 60 percentage points of this $800 billion quite easily. Yeah. So over last several years, global investors have been negative on emerging markets as those markets have done poorly. And so emerging markets have seen sizable outflows since India is, as of today, 16%. At other times, whatever weight outflows from emerging market funds, the funds flow out from India as well. And that's been the problem last 2-3 years. We ourselves have an emerging market funds where we are clearly seeing a change in investor preferences because emerging markets has done very well this year. EM index is up 30%, which is beating the developed world index. And as a consequence, we are seeing some reallocations on global allocators front where they are investing more and shifting more in emerging markets. And you must have seen that India has seen some inflows over the last couple of months already. A good part of it in our assessment is coming through the inflows of emerging markets. We do see that if it's all subject to how these markets do, if emerging markets do not fall apart or maintain their lead through year end, which is basically December this month, we're likely to see, going by past behavioral patterns of these global allocators, we're likely to see in January a decent amount of allocation come to emerging markets, and part of that should flow to India. So that should, the prospects for positive flows for India look stronger than they have in a long time period.